Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 29th, 2025, and we're diving into Starbucks Q3 fiscal year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Starbucks' latest financial performance and strategic initiatives.
Starbucks has been implementing its Back to Starbucks strategy. How has this impacted their recent performance?
Starbucks has shown a 4% increase in consolidated net revenues, reaching $9.5 billion. However, the strategy has also led to some challenges, which we'll explore in detail.
Revenue and profitability overview. Let's start with the top line. Starbucks reported a net revenue of $9.5 billion for Q3 2025, a 4% increase. John, can you elaborate on the profitability aspect?
Absolutely. Despite the revenue growth, Starbucks' GAAP EPS was 49 cents, and the adjusted EPS was 50, which is below the forecasted 64 cents. The operating margin contracted to 9.9%, primarily due to investments in their Back to Starbucks strategy and inflationary pressures.
What about their net income?
Net income for the quarter was $558.3 million, a significant decline of 47% compared to the previous year. This was impacted by one-time investments and a higher effective tax rate.
Segment performance analysis. John, let's break down the performance by segments. How did North America fare?
In North America, revenues increased by 2% to $6.9 billion, driven by new store openings. However, comparable store sales declined by 2%, affecting overall performance.
And what about the international segment?
The international segment saw a 9% increase in revenues to $2.0 billion, thanks to new store growth and favorable currency impacts. However, operating income decreased due to increased promotional activities.
Lastly, the channel development segment.
Channel development revenues rose by 10% to $483.8 million, primarily due to the Global Coffee Alliance. Yet, operating income declined due to higher product costs and a shift in mix.
Strategic initiatives and leadership comments. Starbucks has been focusing on strategic initiatives. What are the key highlights from their leadership?
CEO Brian Niccol emphasized that they are ahead of schedule in their turnaround efforts, with plans to unleash innovation in 2026. CFO Kathy Smith highlighted a significant investment in their Leadership Experience 2025, which impacted EPS by 11 cents.
And what about shareholder returns?
Starbucks declared a cash dividend of 61 cents per share, marking 61 consecutive quarters of dividend payouts, showcasing their commitment to shareholder value.
Market reaction and future outlook. How has the market reacted to Starbucks' earnings report?
The market reaction has been mixed. The EPS miss against the forecast of 64 cents has raised concerns, but the strategic focus on innovation and long-term growth has kept investor interest alive.
What can we expect from Starbucks moving forward?
Starbucks is poised to focus on innovation in 2026, aiming to enhance customer service and drive growth. Their strategic initiatives are expected to build a stronger foundation for future performance.
Key takeaways. In summary, Starbucks reported a solid revenue increase but faced challenges in profitability. Their strategic initiatives and focus on innovation are key to their future growth. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing Starbucks' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Starbucks' performance in the comments below.